YouTube has said that they're gaining on TikTok in the short video space. But what does that mean to the overall investment opportunity for Alphabet, the parent of YouTube? That's what we're going to talk about in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one. So you can see here that YouTube says that it's gaining on TikTok in the short video race. And so this article goes on to say that Alphabet's Google discloses its short monthly viewership for the first time amid the heightened competition from TikTok and Instagram Reels. So obviously Instagram Reels is owned by Meta and TikTok is owned by ByteDance, a Chinese company. And my main takeaway is that no matter what social media platform you use, you're not going to miss out on short-term videos or short-form videos. But if you don't use YouTube, you miss out on long-form content. So I conclude from this that YouTube maintains the strongest moat amongst the social media video platforms. And I think as users, if you have access to YouTube and if you have access to Instagram, you largely have access to all of the video content out there. You can download TikTok, but I just don't think TikTok is going to get downloaded by the older audience. So I think TikTok slows in terms of the audience penetration that they get into. Now, this article goes in to say more than 1.5 billion people choose to watch YouTube Shorts every month, indicating that short video service has reached a comparable scale to its rival TikTok after launching less than 2 years ago. And what I always say, and this article has said, is that YouTube is a pillar to Google's business, generating more than $28 billion in advertising revenue last year. But here's the most important thing. There's an all-out fight right now for the short video content space between YouTube, Instagram Reels, and TikTok. And what this article is saying is that Alphabet has found a way to compete with their YouTube Shorts platform. And so this spells tough news for ByteDance and for Meta, because this is not just Alphabet's bread and butter business. YouTube is very good, but Alphabet has other offerings which are very important for investors, including their cloud business, which is growing in its top 3 globally, and their search business, which is continuing to grow, albeit at a slower pace with the continued growth of the internet, but it's got a #1 penetration rate, that Google search. Something like around 95% of overall searches are being done on Google. And just to show you the amount of scale, TikTok said in September that the app had drawn in more than 1 billion monthly active users, which is now comparable with YouTube Shorts. But here's the thing, Instagram is still ahead. Instagram passed 2 billion monthly active users last year. And so that shows to you how important Instagram is. But the other thing that I'm noticing is that content creators on TikTok are also posting their content on YouTube Shorts and on Instagram. So you're not really missing out on anything by not having a TikTok account. Now, here's one thing that's very important for YouTube. The thing about YouTube is that it's never really been an advertising platform for immediate purchases. And so I think that's changing. So you can see here, YouTube's advertising plans are eventually going to allow companies to make their ads shoppable. So that's a new powerful revenue stream which will push direct engagement. And this is a big idea in my opinion, because one of the reasons why Facebook and Instagram work so well is because they're so good with direct engagement. So now that you can get YouTube to start focusing in on direct engagement as well, I think that's a powerful diversification strategy and will pull dollars that have only been slated for Facebook and Instagram up until this point. And just to give you an idea of exactly how fast YouTube is growing, you can see here, this is the model that the Patreons get access to at that lower tier. YouTube ads grew by 46% in 2021, and I'm forecasting that they grow between 20 and 30% through to 2026. And so there's a lot of substantial growth continuing with YouTube. But you can see that that's not their only space that they're growing in. You can see that Google Cloud below is growing at an even faster rate at 25% year over year. So the overall revenue is expected to grow for Alphabet at above 15% annually. So that's really big for a company that's as large as they currently are. And so what does that mean for my valuation? Well, you can see here that I'm using a very low terminal multiple of 22.5 times earnings. I think that the multiple that I should be using should be closer to that average multiple of maybe 30 times earnings, maybe even 25 times earnings, and I might change that. But you can see that even with this low terminal multiple of 22.5 times earnings, I'm valuing the company at almost $4,000 per share. And its current share price of $2,100 per share really shows you how undervalued this company is. This might be the most undervalued super company on my list. And I highlight the super companies with like a green highlight. And so the current share price as a percentage of the valuation is 55%, which is unheard of for Alphabet. I think it's a huge opportunity. Now, this is not an endorsement to buy. This is not financial advice, but what I am saying is that this is a big opportunity. And it's not like I'm the only one that's seeing this. Michael Burry is also seeing this, and he's added this to his portfolio as well. And overall, in terms of the tracker, you can see where exactly Alphabet stacks up relative to the other companies. Alphabet is in sort of that 10 area where the share price is now approaching that lower than 50% of its intrinsic value area. But I think because of how strong Alphabet is right now, I think you could buy the shares at the current share price and be totally fine. And then, of course, just for scale, you can see that Alibaba is obviously cheaper at 35% of its intrinsic value, as the current share price is $100 per share and the intrinsic value is $300 per share, at least at the recording of this video. And the other thing that I do want to point out is that you can see here, super investors are obviously noticing this opportunity. Alphabet was the third most purchased company by super investors in Q1 of 2022, and you can see by the way that I explained the opportunity, you can see exactly why they're doing so. And of course, if you want access to all the models, the tracker, and all the additional models that roll out of that tracker and they build up into the tracker, you can get access to all of that at the lower Patreon level. And once again, like I always say, if you try it out and you decide that it's not for you, don't just cancel your subscription. Message me in the Patreon app and let me know that you tried it and it wasn't for you, and I'll fully refund your first month subscription just to make sure that there's zero risk to you. Now, you saw that list of the top 3 companies being purchased most by super investors. Well, Meta was the #1 most purchased stock, and I actually did a video covering the opportunity, which you can get to right here.